Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, January 22nd, 5:10 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend. You can see on the trend gauge over here in the upper right of the screen, the little yellow sub arrow has come off our short-term signal as small cap index led the way today, regaining its 21-day moving average. So we've got the four green arrows over here that representing market leadership, as well as all five of the major indexes primary trend, using the 21-day moving average for the short-term trend, 50-day moving average for medium-term, 200-day moving average for long-term. So what happened today? As I mentioned, small caps led the way. Big-7 took a little bit of a rest. Dow topped 38,000 for the first time and closed just barely above that. All in all, a solid day for the market. Here are the final numbers. Big-7 down an average of 0.24%. Just Nvidia and Apple positive on the day. Tesla, the big drag, down 1.6%. They report earnings after the close on Wednesday. RG8, just what you want to see, up 1.5%. S&P 500 opened up 0.3. Pulled back a bit, pulled up a bit, pulled back a bit, traded in a tight range for most of the late morning and all afternoon, ended up basically pinned to that 49.50 level, ended up 0.2%. Equal weight fared better, up 0.5%. NASDAQ 100 gapped up 0.6, and some selling hitting the big, really profit taking, not selling, hitting some of the Big-7 stocks as that money appeared to flow into small caps today. Equal weight up 0.43%, while the NASDAQ 100 closed up 0.13. Dow up 0.36, mid caps up 1.2, Russell 2000 up 2%, Global 60/40 up 0.15%, in-house GROTECTION up approximately 0.1%. We got hit again by a downgrade on something that we recently bought. Stopped out on ELF, which recovered by the end of the day. That's one of the challenges of handling leading growth stocks. When they get hit with a downgrade, sometimes the selling is just a bit overwhelming. The last thing you want to do is get caught in something that's down 5% that closes the day down 10% or worse because you think it's going to bounce and it doesn't bounce. That's kind of what happened with Celsius last week, but in fact bounce. We'll take a look at the chart momentarily here, but let's start with the indexes. Here's the S&P 500. 5-minute chart pretty much displays the story. We have been pulling back Monday and last Tuesday and Wednesday, shortened holiday with MLK Day, and then we just started rallying, and we went on a frozen rope rally. This is a 5-minute chart starting Thursday afternoon, all day, basically Friday, and a gap up after that, a bit euphoric. Leading stocks gapped up across the board and pretty much started to reverse within the first 30 minutes after that. You know it's coming after a strong run up. It's just euphoria, fear of missing out. And then some things started to pull back, and you can see the tight range into the close, but no damage done. It's a bull market. We top 4,800. We can certainly pull back and test 4,800. The 8-day exponential moving average is going to cross that level tomorrow. And we've got the 21-day moving average all the way up to 47.53. It'll be around 47.63 tomorrow. Best case scenario for bulls is you just chill here a little bit after 3 days up, get some support around that 4,800 area, and then try to launch again. Here's the NASDAQ 100. Higher close, but reversed also. 5-minute chart, same thing. Rally, half day Thursday, rally all day Friday, gap up Monday, and then some selling came in, tight range into the close. Again, no damage done. Dow Jones Industrial Average crossed 38K for the first time and closed just barely above it at 38,002. Now we are seeing what we wanted to see, and that some strength come back into mid caps and small caps. You can see mid caps rallying Thursday and Friday up above the 21-day, and a gap up today, closed in the upper third of the range. Now small caps bouncing off the 10-week/50-day moving average, gapped above the 21-day, closed in the upper probably 10% of the range. Let's see what the closing range is. Yeah, 90% of the range. And you can see the 21-day and the 8-day exponential moving averages hooking up. Now, if we pull back here, we want them to provide support, unlike a couple of weeks ago where they started pulling back and broke below them, couldn't get back above them, had another leg down here before meeting up with the 50-day moving average. But looking for the possibility of some money rotating into small caps here, which would be a good thing. It'll improve breadth. It'll flip the NASDAQ McClellan Summation Index off of the downtrend, and that's another tailwind for stocks if we get that. Here's the VIX lower today, breaking just barely below the 50-day moving average and the 21-day moving average. The dollar got stronger while the stocks were pulling back. You can see it closed at the high of the range. Let's look at the 5-minute chart here. Basically the complete opposite of what we saw Thursday, Friday, and in a gap down, but gathered some strength. And with this strength, the market kind of went sideways. So there's the dollar. We'll look at gold and gold stocks. Gold hanging right around that 50-day moving average. GDX continues to be a train wreck, but at least it's been 4 tight closes in a row there. Bitcoin continues to get hammered since those Bitcoin ETFs. 20% haircut since then, and now we're down. Very failed breakout now above this level, down into that range, although we did close off the daily lows below the 50-day moving average, below the 21-day moving average, above the 200. See if today's lows can hold and see if it can get back into the breakout range here. It's kind of after 1, 2, 3, 4, 5, 6 out of 7 days down. We're due for some support there. Let's look at bonds now. Bonds traded tightly today. Price up a bit, meaning yields down slightly. Here's the TLT. Price up 6/10, so yields pulled back. Let's look at the TYX. That's the 30-year yield. Bounced off the 8-day exponential moving average, down 0.85%, and the 10-year down 1.25%. So that's the inter-asset correlation. Let's go to the tail of the tape. You can pause this. So a little bit of news. The Fed, strong economic data has come out last week, and the odds of a rate cut at the March Fed meeting have been cut in half from last week. Last week they're up at 81%, cut down to 40% now, but the market doesn't seem to care as it continues making higher highs. Third day up, day 3 above the 8-day exponential moving average on the S&P, 11th day above the 21-day. Mentioned the tight base. Standouts today, ITB with yields pulling back a bit. KRE, regional banks starting to report some earnings, and we'll see how that plays out. But if those get the all clear, small caps could really rally, and that's kind of something we're looking for. It's will we get it? We don't know, but Zion Bank reported above before the open and was up on the day. So we'll see how these continue to play out now that the big banks are out of the way. Software led the way today on the downside. Bitcoin, XLY, PNU, that is discretionary, which is mostly Tesla and Amazon. Staples and utilities, uranium also taking a break. So in the portfolio, talked about ELF got the downgrade. It's also in the middle of that rebalance. That was just too much to overcome at the beginning, and our stop was triggered early, making a fool out of me. But it's part of the game. Do you take the risk or don't? We can always get back in. We want to protect client assets. We did some offensive selling on CrowdStrike as it got up to +4 ATR and a Livermore around 100, in this case 300 level, and we bought UWM, the small cap. 2 times small cap to add to our small cap position. Bottom line on the day, small caps lead, regain the 21-day moving average. Dow top 38K, Big-7 took a break. Let's see what comes out the rest of this week. The big, we get GDP, preliminary GDP for the 4th quarter later this week, as well as PCE inflation data, and that's the Fed's favorite indicator. So let's look at ELF here. We mentioned why we bought this last week on the announcement of the move from the S&P 600 to the S&P 400, and the trade was looking great, doing what we wanted it to do. And then the gap down and just big selling on big volume out of the gate today. Our stop got triggered down here below 145-ish. We sold it, and then of course it started to rally back and formed a cup into the close. Ended the day only down about 2.5% and regaining the 21-day moving average. We'll keep an eye on it, but this is just the stock just has not get along with me, plain and simple. There are just some names that I don't know what to say about it, but ELF is one of those troublesome names for me anyway. But I did not want, to see it do what Celsius did, which is end up down 13% last week. You saw Celsius's gap down after a downgrade, and no buyers came in. This was very similar to what happened the first 20 minutes, and this was in the back of my mind as the stop was getting triggered. Wouldn't have been surprised if it made a fool out of me, but it just as easily could just continue to trudge lower as this did on Friday. No buyers at all. Tried to bounce this morning and more sellers came in. So it's just part of it. It's all built into the stats that we track and with the net profitable system that we have. So it's unfortunate, but it is what it is. Let's talk about SMCI. The other problem child. Last week, I stopped out on it before. The day before, they announced a big move on earnings. But look at this, gapping up massively at the open again, continuing higher, and then a rug pull, sending it lower on the day before some buyers came in. We definitely want to keep an eye on this stock because you just don't see a big breakout like this on big volume and a massive run like this. But it's a bucking bronco, and it would be nice if it calmed down a bit. Let's take a look at the portfolio and see how it's doing. Here's Eli Lilly, just kind of going sideways after bouncing off the 21 last week. CrowdStrike, we did the offensive selling today into the 300 level. Let's look at a 5-minute chart here. It gapped up, played around that 300 level for a while, came back down, tried to regain it and failed, and that combined with the +4 ATR, we sold a quarter of the position to lock in an 18% gain on that most recent buy that we did. So nice gain there. And if it pulls back, we can get our full position back on. But for now, it's down to a 3/4 size position. Nvidia continues to act like champ. Just barely up today, but it's also at a 600 round number level. AMD, this one had a rough day today in the morning, recovered quite a bit of it by the end of the close, but after a big 7% up day, just selling off the first 90 minutes, got about a little less than a half size position in this. We're slightly over 10% in semiconductors between AMD, but just trying to give this some room as long as it's working above the 8-day exponential moving average. Uber, a little bit of weakness today, but made new highs last week, and it was down almost 1%, but it was volume 50% below average. Datadog had a good day today. Good dog. Gap up, closed near the bottom of the range as it just got a little bit too extended. Nothing wrong with this one, though. Half-size position in this one. You can see, look at all the blue bars, how many days up it's had after this shakeout at the 120 level middle of last week. And finally, Affirm. This has a near 8% ATR. It was up 12% at one point. We got a pretty good entry in this. I talked about it in Friday's video, bounce off the 10-week. But Affirm is going to do Affirm type things, very volatile intraday, as you can see. As long as it's riding the 21 and the 8 higher, we'll let that work its way higher if that's what it wants to do. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, you've been keeping Dan busy, email him, my partner Dan Stewart, dan@revereasset.com. Remember, it's not how much you make in the market, it's how much of that you can keep. Right now, we are in make mode, growth mode. And with the market As long as it continues to act bullish, that's where we'll stay. Stops in place as always. And with that, I'll wrap up the video for Monday, January 22nd. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.